After an explosive year for stocks and crypto in 2021, the beginning of 2022 has been one of the worst starts on record. And in a downturn, tech stocks get hit even harder, and the small innovation companies like Ark ETFs and crypto get hit even harder. Now, Cathie Wood, being a market leader and on the front line of innovation, she's not a stranger to volatility. And she says we can actually use volatility to our advantage. She says when the rebound does come, like a coiled spring, it's going to be explosive. And she says she's never seen things this undervalued in her entire career. So in this video, we'll dig in and look at using volatility to our advantage, this explosive rebound that she's talking about, and then finish up with the best advice for investors. What do we do when things just keep dropping through the floor? As always, if you do enjoy anything in the video, then drop a like, always appreciated. Okay, so if you're invested in crypto or the Ark ETFs, then you're going to have to get used to extreme volatility, up and down. The question is though, can we use this volatility to our advantage? Ready? Let's do this.
Volatility is not always a bad word. In fact, in a bull market, volatility is your friend. Certainly that was the case for us in 2020. The reason it has become a bad word is since the tech and telecom bust, we have seen every bear market accompanied by an increase in volatility as measured by the CBOE's VIX. And yet, because so many people in the business joined after the tech and telecom bubble, they do not remember that we have seen volatility move up in up markets for extended periods of time. And I think we will go back there again. I think 2020 was a glimpse at that. And we use the volatility to our advantage. We know that disruptive innovation is controversial, and with controversy can come volatility. So we use the volatility to our advantage. And very often you will see that trading around volatility adds significant alpha. In 2018, when the market was down, our trading around Tesla alone, now granted, it was one of the more volatile ones, our trading around the volatility of Tesla alone added, I believe, 175 basis points to performance in a down year. That had nothing to do with how Tesla did. That was simply our trading. So we do use it. I believe we've used it massively in this last year. And the proof will be in the next few years. Well, we'll see if this leaning into the negative sentiment and declining prices is going to pay off. It has every other time in my career.
So, investing when sentiment is at its worst and leaning into declining prices. Basically investing in times of extreme fear. And apparently it's worked out every time for Cathie Wood in her career. So let's take a look at crypto sentiment as of right now. So this is the crypto fear and greed index as it looks right now, and we've got a reading of 24. So this is basically out of 100. So this would be 0. Here we have 24 when we're in extreme fear, and then as it gets higher, this would be greed as we get into the higher figures. And this is how it looks over the past year. So you can see from 0 to 100. These are the times in extreme greed. These are the big crashes, and it goes into extreme fear with the low readings. greed, then fear, greed, then fear, where we are right now. And now compare this to Bitcoin's price. This was the price over the last year. Big run-ups. This is when we're in greed territory. Then we go into fear, then greed, then fear, then greed, then fear. And it's almost an exact match. Check it out. So keep this pattern in your mind. We have greed, fear, greed, fear, greed, fear. We have greed, fear, greed, fear, greed, fear. Now let me ask you a question. When is the best time to invest? Should you be investing in times of extreme greed, or are your best investments in the time of extreme fear? And I think when you look at the price, the answer is quite obvious. It's investing in the times of extreme fear. These are always the very best buys. And ironically, it actually reduces your risk. It's a lot easier to fall when things are setting all-time high. But then here's the amazing fact. Most people buy when things are going up. The only reason you can get a crash is if more people are selling. And that is what she is talking about. Okay, next up. The Ark ETFs and crypto have taken a beating this year. So what would Cathie Wood say to the critics who bring up performance so far this year?
If you look at that strategy on a rolling 24-month basis, and to do that, we have 63 observations now, because we started the firm in 2014. 63 observations over a 24-month rolling basis. 91% of the time we have outperformed the broad-based averages. If you look at on a 3-year basis, so I guess we go down to, that would be 51 observations, I think. We have never underperformed the market on a rolling 3-year, from a rolling 3-year point of view. What this means is that this rubber band has been stretched so tautly, so tightly, that we believe, and consider the source, but we truly believe, given the valuations in our portfolio, the growth in the portfolio, and the fact that we're probably looking at very choppy waters from a cyclical point of view, so that our secular growers are going to shine, we truly believe that rubber band will snap and the performance will rebound. I'm not going to say can't hold me to any particular speed, but we think the undervaluation in the portfolio right now has reached an extreme I've never experienced in my career. And I don't think we're missing anything. I really don't. Of course, when we go through a period like this, we examine all of our assumptions, and we can be very hard on ourselves, and that's a very healthy process. And I can tell you, and I'm talking about both macro and micro, I believe what I just said about our portfolios. They are ready like a coiled spring.
So the undervaluation going on right now has reached an extreme that she's never seen in her entire career. Now, when I hear those words, all I can think is excellent buying opportunity. And she says it's like a coiled spring ready to bounce back. And I would certainly agree. If anyone is looking to get into the Ark ETFs or crypto, then you really don't want to be buying when everything's setting new all-time highs. You want to be buying when everything's on a 50% sale. But mentally, it's so much harder to do, as it probably means losing money almost instantly in the short term, which is why most people don't do it, as it's so much easier to buy something that's going up. Okay, to finish up, Cathie now talks about crash psychology and one of the best things an investor can do when things are crashing and they just keep going lower.
I will harken back to 0809. How many people do both of us know who just couldn't take it anymore, and they They became very emotional. Their life was flashing before their eyes. They thought they were going to be destitute. You conjure up all kinds of fears as downward momentum continues relentlessly day by day. And they finally can't take it. They sell, and they regret it for the rest of their lives. They think about it every day the market goes up after that. And so I would agree with you. An emotional response, just avoid it. It is usually catastrophic to long-term performance. What is additive and significantly so to performance is averaging down. It doesn't feel good maybe as you're doing it, but you would be shocked how little it takes if you're consistent and you just keep averaging down.
Cathie Wood is on the front line of the high-risk, high-reward strategy of investing in innovation. However, with smaller innovation companies and crypto, this does come with a much higher degree of volatility when compared to something like investing in a broad-based ETF or index fund. Cathie Wood says the volatility can be used to the investor's advantage, but the key is not getting caught in the fear. And every time she's gone against the crowd and invested into negative sentiment, so far it's always worked out. She says right now the undervaluation has never been this extreme in her entire career, and the right thing to do is just keep dollar cost averaging in all the way down. And when the rebound comes, it's going to be like a coiled spring when released. So there you are, guys. Hope you enjoyed. Tell me, what do you think? Is now the very best time to buy, or should we be sitting on the sidelines and waiting? Let me know below. But for now, just to say, if you did enjoy anything in the video, then drop a like. And a big thank you to everyone who does. If you haven't yet subscribed, click below and join us. Got some great videos coming up that you don't want to miss. Okay, cheers guys. Thanks for watching, and I'll see you in the next video. Bye for now.